Life with Crypto brothers and sisters. Welcome to another Money Monday live training. Today's topic is a continuation of how to avoid crypto scams, and we'll focus on what I call indirect scams. This investment scam doesn't target just an individual, but affects many people. So if you're watching this live and you'd like to comment, I am able to see your comments now. Last week, Willie let me know that I had forgotten to turn my microphone on. Today, I have remembered to. So on this screen over here, I can see your comments. So feel free to leave one, and I'll do my best to respond. And as always, at the end of the training, if you found it helpful, please put a 1 in the comments section and share your thoughts. This helps me know that I'm creating content that you want. So here we go. Let's get started. So reports to the FTC, who's known as the Federal Trade Commission, shows that scammers are alarmingly responsible for stealing people's money. Since 2021, more than $1 billion in crypto has been reported lost or stolen by about 46,000 people. I just find that appalling that $1 billion in a year, a little over a year actually, has been stolen. You know, it's really sad. I'm really lucky that I haven't experienced very much of this theft, thank goodness, but I know many of my viewers have. So that's why we're going to cover this in depth. So a recent consumer protection report points to social media as the starting place for about half of the people who reported losing crypto to a scam between the specific dates of January 1, 2021 and March 31st, 2022. This report said that those scammed said it started with either an ad, a post, or a message on a social media platform. That makes me very sad because unfortunately, that makes it very difficult for us legitimate crypto educators to reach people and have them trust our ads or our posts, which is partly the reason why my group is private and I watch it very closely to make sure that there's no spam or anything like there that's allowed on the site, because I want everybody to feel safe and to trust the information that's being shared. Most of the crypto that's been reported in fraud losses that began on social media were investment scams. In fact, 64% or $575 million of all crypto fraud losses reported to the FTC were about bogus investment opportunities. So today, I'm going to talk about what you need to know to avoid what I call indirect investment scams. But first, I want to mention a couple more what I call direct crypto scams. Last week, I talked about direct scams where people try to steal crypto directly from you. And here are a couple more direct scams that I want you to be aware of. First, there's one called an investment manager scam. And this is when a so-called investment manager contacts you out of the blue. They promise to grow your money, but only if you buy crypto and transfer it into an online account that they manage. That is a scam. There's also scammers that impersonate well-known companies. These come in waves, and scammers might say they're from businesses like Amazon, Microsoft, FedEx. They could say they're from your bank and many other well-known businesses. They could text you, they could call you, they could email you, they could even send you messages on any social media platform. Or maybe they even get a pop-up somehow that shows up on your computer giving you an alert saying that, you know, your account has been scammed or something and that you've got to contact us to fix it. I always say, and I always do, ignore all of these types of communications. And I go directly to the business website and directly to my account. And I double check, is there indeed a problem with my account? And every time I've gotten one of these messages, and I've gotten a fair amount of them, I'm sure you have too, they've always turned out to be bogus. There's never been anything wrong with my account. So always go direct to the business in question and ask them if there's a problem with your account. Another direct scam is this one's funny, is an online love interest wants to send wants you to send them crypto so they can help you invest it. So this happens in online dating, apparently, and this one was new to me. So as soon as someone you meet at an online dating site asks you for money or crypto and offers you investment advice and how to invest that and make lots of money, know that that is a scam. Maybe that's a red flag to not continue communication with that particular person. And one last direct scam to be aware of is scammers will make big claims without any details or explanations. No matter what the investment, find out how it works and ask questions about where your money's going. Honest investment opportunities want to share that type of information with you, and they want to back it up with details that you can verify. So always check. And that last direct scam, that's a perfect segue into what I want to talk about today, which are indirect crypto scams. So what exactly are they? Well, this type of scam is one that affects many people all at once and usually involves large sums of money. The two most well-known indirect scams are called rug pulls and pump and dumps. We're going to first talk about rug pulls. Rug pulls, P-U-L-L-S. So a rug pull scam, the name rug pull scam comes from the expression pulling the rug out from under you. These are scams where literally you think something's going well and all of a sudden it isn't. There are three types of rug pull scams. Three types right now. There used to only be one, and now there's at least three. I'm going to talk about the three most common ones. It used to be that the main rug pull was from what's called an ICO. That stands for an initial coin offering. And those were hugely popular in 2017, which is a big part of what caused the bull run in 2017. ICOs were a way for companies or anyone to create their own cryptocurrency and offer it on the internet as a way to raise money. And a lot of people did, and most of them were scams, unfortunately. Now, there are still ICOs available to people. You don't hear about it very much anymore because of the government cracking down on ICOs, calling many of them securities, but ICOs still exist. So you want to just be careful and you want to do your research. And we'll talk about later on in this talk what kind of research to do. The next type of rug pull is an IEO, and that stands for an initial exchange offering. And these are for new centralized exchanges. And the third type of rug pull is an IDO, and that stands for an initial DEX offering. And DEX, D-E-X, stands for a new decentralized exchange. So a definition of any type of rug pull would be that the creator of a new crypto coin or a new exchange or a new DEX excites the community about the possibility of high returns with their new project with the intention of raising money. They talk it up on social media. They even hire others to hype it up for them. Once the price starts to pump or go up, they will sell their holdings and take off with the money, and then the project gets shut down. Their websites get shut down, their Twitter accounts, their Facebook accounts, their Discord, their Telegram accounts all get shut down. And it's an unfortunate thing, but it has happened way too often. So within rug pulls, there are actually two different kinds of rug pulls. One is called a hard rug pull, and this type of rug pull is illegal because the developers intentionally write the code on the blockchain in such a way that it dupes investors with the intention of stealing their funds. This is done most commonly by locking up the investor's assets without having a clear reason for doing so. And then because your assets are locked up, you don't have access to them. The second type of rug pull, I keep wanting to say pool because of my little bit of a Southern accent. I am originally from Atlanta, Georgia, and my accent comes out with certain words. Oil is one of them. It's hard for me to say the word oil. I say oil. So a rug pull, a soft rug pull, In this type of rug pull, a developer attracts investors to a new crypto project, enticing them with fantastic marketing slogans and other such things. Then they pull out of the project either before it's built or shortly thereafter. Sometimes they'll let the project start, making you think that it's something that's good, and then it ends up not being so. And this leaves the investors with a worthless asset, and the developers disappear with all their money. And this type of rug pull is unethical, but not necessarily illegal, at least not at this point. So the next type of indirect scam is called a pump and dump. So in a pump and dump scam in crypto, it's often orchestrated. It's an orchestrated fraud that involves misleading investors into purchasing artificially inflated tokens that have been marketed and hyped by paying celebrities and social influencers to make them sound like they're the next best thing since sliced cheese. And more often than not, the positive news that is being marketed is completely made up. They make up all kinds of wonderful news about how wonderful a crypto is with the sole intention of pumping its price. And that's not complicated. This pump and dump isn't complicated. And for us, even the rug pull isn't necessarily complicated. You think a project is trustworthy, you put your money into it, and it goes up to some price, and they shut it down one way or the other, and it's kind of sad, but it happens all too often. So what can you do to protect yourself? The first list of things that you can do to protect yourself I'm going to share with you was created by the SEC. Before investing your money into any crypto project, verify that the individuals and firms offering an investment are legitimate. Carefully review all the materials about any investment opportunity and ask questions. And I think that's valid advice. And I'm going to share with you the specific ways that the SEC suggests that you do that. So the first few things is that they suggest that you look out for guaranteed high investment returns. I mean, that should be a no-brainer, but it has to be said over and over again so that people know what to look for. Promises of high investment returns with little or no risk are a classic warning sign of fraud. Now, granted, in the crypto world, it is possible to make 1,000% return. That's one of the things that draws people into crypto, is you can make a lot of money in crypto a lot easier than you can in the stock market or even in the Forex market. But some of these projects that claim very high investment returns with little or no risk are fraudulent projects. Now, if you got into Bitcoin early on, you would have made many thousands of % return if you had held your Bitcoin that you might have bought in 2015 or 2016. I bought some in 2015, but unfortunately, I didn't know then what I know now, and I didn't hold it long term. I sold it when it went up to $1,200, thinking I had made a boatload of money because I bought them at $250. That was a fabulous return on my investment. But it was not unusual because it was still early in the life of crypto. But it is still a warning sign. Fraudsters may post fabricated historical returns on their websites showing high investment returns. And that's a difficult thing to find out whether it's true or not. So you have to do lots of other things to determine if a project that you're interested in is fraudulent or not. Here's another thing recommended by the SEC is to check for unlicensed and unregistered sellers. Now, this isn't going after the project itself. This is telling you to be aware of people who are trying to sell you into the project. So unlicensed and unregistered sellers commit much of the securities fraud targeting retail investors in the US, according to the SEC. They suggest you check out the background, including their license and registration, of any securities broker offering you an investment in a security or cryptocurrency. And they have a search tool that you can use at investor.gov. And the only thing that's good for is for looking up brokers, security brokers, who, if a certain crypto has been determined as security and they're selling those crypto, then their name would show up in this list. So I don't think very many of you are actually going to be working with a broker, but I wanted to let you know anyway that this site does exist, investor.gov, and you can look up any securities broker and find out what the status is of their license and registration. So the next thing this SEC recommends is to look for skyrocketing account values. Depictions of investment accounts rapidly increasing in value and providing large returns are often fake. This is a tactic fraudsters use to entice investors with the prospect of great wealth. Again, if it looks too good to be true, it probably is. And the next one actually says that. Sounds too good to be true. If an investment opportunity sounds too good to be true, it probably is. Remember that the potential for high investment returns usually involves high risk. So if an investment sounds too good to be true, it may be true, but it still is going to involve high risk because all the high payers do. So you got to be extra careful. And another one that not only is recommended to watch out for by the SEC, but by other crypto users as well, is fake testimonials. Never rely solely on testimonials in making an investment decision. Fraudsters sometimes pay people, for example, actors, to pose as ordinary people turned millionaires, social media influencers, and celebrities. All of these types of people are oftentimes paid to tout an investment on social media or in a video. So you got to be extra careful. So I've got some more ways that you can look for how to spot a rug pull. And these are ones that are put out by the crypto community. And these are the ones that I tend to follow when I'm trying to decide if a platform is valid or not. So how to spot a rug pull. Here are some telltale signs of potential rug pulls that have been put out by crypto users. So the first one, and let's see, there's 1, 2, 3, 4, 5, 6, 7. I have 8 of them here. The first one is low or no team credibility. Verify the team's credibility by searching for their track records, their social media, employment history, and industry connections. Now, I just realized that one of the ones that I have down here is similar to number 1, but that's okay. I'm going to continue because it actually covers something slightly different. But low or no team credibility. You got to find out who the team is, who the founders are. Are they legit? Number 2, ambiguous cryptocurrency white papers. Now, I realize that most people do not want to bother reading a white paper. And if you don't even know what a white paper is, I'll try to explain it. All cryptocurrency projects, beginning with the very first one, Bitcoin, have always put out a white paper to explain what they are, what they're doing, how their project works, what the technology is behind their project. A white paper should tell you about their cryptocurrency if they have one, which most likely they do. They should be telling you about how they're going to utilize their cryptocurrency. Everything you need to know about that project should be in the white paper. Sometimes white papers can be very technical. So now you'll see projects come up with other colored papers. I've seen, what colors have I seen? I've seen them called, I don't know, blue papers or pink papers, or they call them some other color than a white paper because they're trying to imply that this other color is a simplified version of the white paper. And I know you don't want to read the white papers, and I don't blame you. Some of them are hard to read, but you got to read the white papers, or you have to find somebody that you can follow that reads the white papers and explains what they mean in plain English. But then you got to trust the person who's giving you that information. If the white paper is written in an ambiguous and unclear manner, that is often a red flag that it might potentially be an exit scam. An external audit is an indicator of the smart contract soundness, but it is not necessarily proving that the project is sound. So what does that mean? All cryptocurrency projects that are worth their weight in salt are audited. They're audited by an external company to prove that their code is sound and is most likely not going to be hacked. But just because they have their code audited, that might mean that their smart contracts are sound, but it doesn't necessarily mean the business is sound or that the project itself is sound. So that's something else you got to look out for. So the third one is unrealistic projections of returns. Now, this goes back to if something sounds too good to be true, it probably is. And that comes up all the time in all the things that I've researched about what to look out for, how to spot a rug pull. If they're making claims that don't sound reasonable, then it might not be reasonable. It might be a scam. Number 4, large spendings on promotion and marketing. Although highly promoted ICOs might not necessarily be a scam, which I talked about earlier, do exercise caution when deciding to invest in projects which are heavily promoted. This is because less credible founders tend to rely on promotions and advertising to attract investors. And this is something I've been paying more and more attention to. But then again, if, what I pay attention to this because if I go to a website and it looks beautiful, I like that. I want to see a website that somebody has put a lot of time and energy and money into to create something that has a good UI, a good user interface. But sometimes they don't, people that are just running a scam, they're not going to put a lot of time and energy into a good website. So that could be a red flag. You might also see people just going to town on their marketing, and it's like all of a sudden all you hear about is this one particular project that's coming up. It's like on all the social media platforms. Now, it's not unreasonable to expect an ICO. Remember, that's an initial coin offering, or even an IDO, an initial DEX offering, or an IEO, an initial exchange offering. It's not unusual to expect these people to do some marketing. So you kind of have to learn to use your own intuition, if you will. You have to trust your own gut to know whether it's too much or not. But more than just trusting your gut, do all of these steps in determining whether a project is a potential rug pull. Don't just rely on one of them. So large spending on promotion and marketing is just one of many ways to check. Okay, number 5. Few wallet holders and listing only on DEX platforms. Well, this is one that I grabbed that's a little technical, but I threw it in there because I still think it's important. Few wallet holders and listing only on DEX platforms. So what does that mean? If there's not very many people holding a cryptocurrency that's been put out, there's a good chance that it's a scam, or it's also a possibility that nobody knows about it. But why do they not know about it? Well, if they didn't market it, that's where we go back to, it's hard to tell whether the marketing is good or a bad thing. So you have to go through all the steps. So verify the number of token holders, and you can do that via a block explorer tool like Etherscan. Now, I realize this might be a little technical. You might not know what a block explorer is, and you might not know what Etherscan is. But you're going to learn, especially if you stick with my project here, my Life with Crypto Facebook group, which is a big project for me. If you stick with our group and if you go on and do some of my courses, you will know what all these things mean. So this is just an introduction. Just think of it as that, and don't stress if you don't know exactly what it is. So I'm going to read that again. Verify the number of token holders via a block explorer tool like Etherscan. Every blockchain has their own block explorer. One of the ones for the Ethereum blockchain happens to be called Etherscan. You want to check whether it is listed and traded on popular exchanges. So if a coin from an ICO is only listed on decentralized exchange platforms that are so little used that hardly anybody even knows about that platform, that's a sign that it might be a scam, because large platforms, centralized platforms like Coinbase or Binance or Bittrex or Kraken, or decentralized exchange platforms like SushiSwap and Uniswap, they're not going to list a cryptocurrency necessarily that's a scam. Well, at least the centralized exchanges aren't. Unfortunately, on a decentralized exchange, because they're decentralized, you have to be extremely careful, because people can put all kinds of fake cryptocurrency coins on there. So how can you verify whether a cryptocurrency you're considering is worthwhile or not? Well, you can go and use these platforms called CoinGecko and CoinMarketCap. they can reveal a lot of information about a new coin and about all the different platforms that it's listed on. It can tell you how much volume has been traded. And this kind of information can help you know whether there's enough activity with that cryptocurrency to know whether you would want to invest in it. I'm going to tell you right now, be very cautious about what I term penny crypto coins, penny cryptocurrencies. Like penny stocks, they're oftentimes not a good investment. Okay, let's move on to number 6. Number 6 is the tokenomics and demand for a particular crypto. So tokenomics is another fancy word that means how is a project decided that the cryptocurrency that they've created, how is it going to be used? How is it going to be locked up? How much of it is going to go to the founders? How much of it's going to be available to the users? How much of it's going to be used to pay people who maintain the website if it was a proof of stake? So understand the tokenomics of the crypto coin and determine whether it aggressively favors the founders or the users. That's really all you have to know about tokenomics. And you can just do Google searches to find out tokenomics of a particular cryptocurrency. And a lot of guys that do tons of research will tell you whether the tokenomics favor founders or users. Okay, let's go on to number 7. Investigate the founders of the project. So the very first one that I mentioned was low or no team credibility. Well, this one is investigate the founders of the project. But this one's going to tell you to go a little bit further. Believe it or not, there are projects founded by people who don't share their true identities openly. So if you've got a project and you can't find out who's behind it, those projects are more than likely a scam. But let's say you found a project you're interested in and you can see who the founders are. Well, you won't know whether those are true founders or not unless you do research on those founders. And that's what I said to do in number 1. Low or no team credibility. Verify the team's credibility. Search their track record, their social media, their employment history, their industry connections. And that will tell you for sure whether those are legitimate founders or made up ones. But this number 7 is suggesting that you go further than just investigating the founders. In addition to checking on the founders, you want to be sure to go beyond just the founders of the project and look into the other people that are working on the project. And most of these the project websites will list all the people involved. You want to go in and look at their background and experience too. Because it's harder for a scam project to make up all of these different people's credentials. They're not going to be able to do that. So, however, you'd protect yourself from, if you do this by going and looking into all of the people working on a project, you can protect yourself from falling into a fraudulent scheme by researching thoroughly each individual on the team. You want to make sure you look into their LinkedIn profile, their Twitter profiles, their any other online profiles, check their work history. You've checked that on LinkedIn more than likely. And that's another good way to protect yourself. And the last one here, number 8, this is one that that I look for because this stands out to me like a sore thumb. Misspellings and grammatical errors. Look for bad English on websites and in emails, on social media posts, and anywhere else that there's communication about a project. Bad English can be a sign of a scam. Any project that's going to be marketing to the US is going to take the time to hire somebody to review their site and make sure that the English is appropriate for English reading citizens. So I'm always turned off by websites and emails and whatnot where somebody can't speak English very well. I don't even go any further. I just move on. There's plenty of other projects out there. There's over 13,000 cryptocurrencies on the market right now. So there's plenty of projects to check on. So that is all I have for today. This was all about how to protect yourself from indirect cryptocurrency scams. And these are scams where they're not going after you directly. They're going after you indirectly by going after a whole bunch of different investors, by creating rug pulls. These are projects that aren't going to be around for a long time. As soon as they get your money, they're going to abandon the project, pull the website, pull their Twitter accounts, everything, and they're going to run off with the money. And that is definitely something to be aware of in an ICO, initial coin offering, an IEO, an initial exchange offering, and an IDO, initial DEX offering. And then the other thing we talked about today were pump and dumps. And these are projects that are orchestrated in such a way that a lot of advertising is done that is most likely fake, with the sole purpose of pumping the price to a point at which it can be sold. And again, it's an exit scam. The people running it will just exit and take your money with them. So I hope this information was helpful to you. I will post this live meeting, of course, will be on Facebook, but I'm also putting all of my live trainings from Money Mondays into the guides. So that way it'll make it easier for you to find all of them. So as I always say, if you really enjoyed this content, please put a 1 in the comments. Let me know what you thought. And if you have any ideas of other content you'd like to see covered on Money Mondays, let me know, and I'll do my best to do that for you. So hope you all have a great rest of your day. Take care. Bye-bye.